Hi, this is Robert. I'm an attorney with TRP, and we're going to be going through how to get an IRS offer in compromise. And we'll be doing that by going through our guide. We'll also post up, and you can find it at our old website, taxresolutionprofessionals.com. And here we go. First, I should mention, if you have any state tax issues, most states have an offer in compromise program. We also have a guide on California, New York, and Michigan offer in compromise. If you need those as well. Sometimes you might qualify for an IRS one and not get one from the states, but those links are there as well for you. We recently updated this in 2018. There are some new forms. If you already submitted the old forms, it'll probably still process, or they may ask you to update them. So before you file an offer in compromise, here's some considerations to take into account. These are reasons that you might not want to file them, or you might not even qualify. First, you have more assets than the amount owed. If you have more assets than you owe, you're probably not going to qualify. It's probably just a waste of time. If you're not sure, give us a call and we can run through it with you. If you owe due to dissipated assets, these are essentially when you sell something that you're not using for living expenses or something, to make income or some type of business expense. You just sell a 401k and, go buy a car, and then now you owe money and now you're trying to offer in compromise. A lot of time that won't work, depending on how old that is. And our site outlines the guidelines on that, and IRS has some info on that. But due to dissipated assets is what they call it. Essentially, you can't just cash out your 401k, go blow all the money, and then file an offer in compromise the next year. That's essentially what that is made to prevent. Your current tax payments are behind. So if you're self-employed, you should be making estimated tax payments as you go. If you're not making estimated tax payments, you can click on our estimated tax payments guide, see how you're supposed to do that. You need to keep up to date in order to get an offer in compromise even processing. These days, what they do is there's actually a box in the form that asks you if you're up to date. You're supposed to check it. When you send it in, if it's not, they often will send a letter back saying you need to pay this much money by this date, which is the amount they estimate to be your estimated tax payments based on your old tax returns. And then you go from there. The other thing is tax debts are expiring soon. So if you have debts that are about to expire, and you might want to see our page on the collection statute expiration date, then you don't want to file right away, because if they're going to expire soon, you're just extending the amount of time they have to collect on you by filing. And the negative on this is when you get an offer in compromise accepted, often you can get an IRS lien withdrawal, which takes the lien off as if it never showed. When you do when you just let it expire, you can get it released, but it won't show as withdrawn. They may change that in the future, but that's how it is now. You're going to file a bankruptcy. If you're going to file bankruptcy, that typically is going to include most of the tax debts anyway. If there's newer recent tax debts, those might not be included. But while the bankruptcy is pending, they're not going to process your offer in compromise anyway, so there's nothing to do on that end. All right, so now we've gone through those. If you're unsure on any of that, you can give us a call. If you owe more than $20,000, that's the kind of cases we generally will help people with. If it's less than that, we recommend just look at our guide and handle it. And you can reach us at 888-515-4TAX. Again, that's 888-515-4TAX. And now we'll go on to proceeding with your offer in compromise. So what you want to do is you want to find out which tax returns are required to complete. You or your representative, you're going to call the IRS, find out what's required. Some of them are going to be required. Some of them are going to be filed for you if you haven't filed in a long time, and they're going to only ask for so many years are going to be required. You can go back and file older ones that they have filed for you, but that is not always worth it, because if you get an offer in compromise, it's all settled anyway. That does not apply to state tax debts, where many states require you to have the tax returns in order to do an offer in compromise. California, for example, requires that. What I recommend is trying out the pre-qualifier. So this pre-qualifier here, and you can find it at our link under this part 2 on this page, shows you, if you qualify or not, just based on their basic standards. There's still exceptions to that, and people sometimes don't work on the qualifier and still qualify, but that's a good general rule to see how well you're doing on it, essentially. So then you're going to download both the forms, and we actually split the forms up for you, which makes it a little bit easier. And you can also see the full booklet. So the forms are going to be IRS Form 656 and IRS Form 433 AOIC. And what we'll do is right now we're going to go through each of those forms in detail. Our guides show out 433A and 656. And we're going to be covering personal offer and compromise here for individuals. And this would also cover if you're married as well. You just file this jointly. So first, we're going to start with Form 656. Okay. And we're going to go through and we're going to fill it out. And this page we have covers this in more detail if you want to go line by line. How to fill out Form 656. So here's the form. On the top, you're going to check if you use the pre-qualify or not. Then you're going to fill out your individual information. If this is a joint offer, include your spouse. If you guys have different years that you owe on, you don't owe all of them together, you're supposed to file technically 2 separate offers. Put your address, mailing address. Is this a new address? Would you want them to update your records? Most people, this is pretty self-explanatory. So the income tax periods you owe. So check 1040 if you owe individual tax debts for regular tax returns. That's what most people are going to owe. Trust fund recovery penalty is when you've been assessed payroll tax debts for a business. So in their payroll debts, that's what you're going to do. This is typically all going to be for business stuff. If you have another federal type of tax, put it in there. If you're not sure, call us so we can do it for you. Low income certification. So if you make less money, however many people in your family unit, if you make less than this per month, or if you're in Hawaii, Alaska, these amounts, you don't have to pay a down payment and you don't have to pay a fee. So you should check this box here. And then you don't have to pay the $186 processing fee or the 20% down payment. And then it says you qualify for low income certification. Do not include payments with your offer. However, you elect to send in money, and you must check one of the options below. It's better not to send in any money until you get it accepted or not. There'll be one point at which the offer examiner may say you need to send in a higher payment, and I'm going to send it for approval. At that point, you can send it in because pretty much always gets approved at that point. But you should not just send in extra money while it's pending. There's no reason to do that. They accept it or they don't. Because if they don't, you may be going in currently non-collectible status, which doesn't require you to pay anyway. So this is the business section. We're not doing business right now. The reason for the offer. The best one is doubt as to collectability. That's going to be almost all the ones that we submit. Exceptional circumstances, if you're going with that, contact an attorney, see if it's even an option. Very hard to get other stuff, these kinds done. Doubt as collectability is the easiest one to do. Even if there are exceptional circumstances, if you qualify for doubt as collectability, what we do and what we recommend is to just still go with doubt as collectability. It's easier to get accepted almost all the time. That's your reason for offer. In the explanation of circumstances, you just put a basic statement. My financial condition is not good. I'm not making any extra money. I have nothing left at the end of the month. Just give a little explanation and throw it in there. If there's any medical or other special circumstances in there, I would throw that in there as well. Lump sum cash offer is what you're going to want to try to do for Section 4. So the periodic payment, we try never to do these. We almost always try to do lump sum cash because the amount ends up being lower. And it just does. So what happens in a lot of these periodic payment offers, you end up paying it. First, you have to pay while it's pending and all this kind of stuff. And second, you have to do, sometimes that doubles the amount of the offer. So we always going for lump sum cash. You're going to put the total offer amount, 20% of the payment, and the remaining balance. So for example, a lot of the offers we send go for 100. So we're going to do 100. This payment's going to be $20. The main balance is going to be $80. And here's the other part. There's no point in paying these first 4 months. It makes no difference. So you just put 80 here. Why waste your time with all these? You can just put the 80. If you want to pay within a month, pay within a month. But we just put the bottom amount right there because that's all you have to do is pay within 5 months. There's no reason in breaking it up into 5 payments because you can just pay the 5 payments on your own. Okay, we're going down. Skip this. Is IRS use only. So this is about EFTPS payments. So You can designate your payment. If you have a trust fund thing, you may want to be doing this. If you have trust fund debts, really, you probably should be having an attorney do it for you. Electronic federal payment system, all this stuff right here, we don't fill it out. We just put no, and then that's it. Because it's better just to send those checks. It's easier to track. It's better to keep a copy. But they do allow you to pay through this if you want to pay electronically. But I do think it's better to do a check. It's just simpler and easier at this time. Source of funds, a common answer is loans from friends and family. You could put bank account, especially if you're offering that low. They're fine with just putting bank account, your own money. If you're offering a high amount, they do kind of want to know where you're getting this from. If you're going to be borrowing 10 grand to make your offer, where's the 10 grand coming from? Making your payment, you can do the EFTPS, or you can just do the checks. The checks, I believe, is easier at this time. IRS is one of the few entities that actually sometimes is more difficult to pay online because they don't verify the people properly. Filing requirements, you have to have required everything. Have everything filed that was required, which we discussed earlier. If you were not required to file something, so say for example, we're filing this offer for, you owe 2010, 2012, 2013, and you weren't required to file 2011, like there's a missing gap year, I would put that in here, put 2011. You don't need to go back to like 1994 and explain why you didn't need to file 94. Just the years when there's the more recent years when you ask the IRS, what have I not filed for? Any in between years, put those in there. Tax payment requirements. I've made all my required estimated tax payments for the current year. I'm not required to make any. So if you're self-employed, you need to check this, and it should be true. If you're just W-2, this is going to be your answer. And this is for, if you have payroll issues. And if you don't have any payroll issues and you're not a business, you should be checking this as well. So most people, if you just have a W-2 job, this is what you're going to be checking. Not required, not required. If you're self-employed, you're going to be checking this. And if you have payroll that is under your name, you should be doing this. And your estimated tax payment should be up to date. If they're not, or you're close to the end of the year, sometimes the best option is put the case in non-collectible status, then start the year fresh, paying your estimated tax payments, and submit your settlement. Section 7, there's the offer terms. You can sit here and read this. There's no point for me to explain it to you. Pretty much just says all the basics of what's going on. One of the main things you should know about it while it's pending is the time period the IRS says to collect on you is extended while the offer is pending. So the IRS generally, in most cases, has 10 years to collect on their debt. And if you file a settlement and it sits there for a year, well, now they have an extra year to collect. And that's why, the whole thing about really old tax debt, sometimes it's not worth it to file the offer in compromise. If you're not sure, give us a call. You can reach us 888-515-4TAX. Here's Section 8. This is just you signing. If it's a joint debt and your spouse is there, have them sign. If your attorney or someone else is doing it, they should be signing here and their information should be here. And that's how you fill out Form 656. Now let's go on to Form 433 AOIC. And we have an individual page on this that is a little bit more detailed. Also updated just recently for the new form. We'll pull up the form for you. And our video here is pretty much based on this guide. So this is all basic information, Section 1, all your basic personal information. So note here is these people on the bottom of Section 1 are everyone living in your house is essentially what they want. Section 2, if you or your spouse has a W-2 job, this is the information that's going to be put in here. Basic employer info, nothing special. Personal asset information, Section 3. At the top is your bank accounts. This is going to be investment accounts. It's all pretty much basic stuff. You'll notice here they're doing a times 0.8. So say I have a $100,000 investment account. It actually goes 0.8 to $80,000. minus loan balance, pretend there's no loans. So what's the real value? According to the IRS, it's $80,000, and they do this because it's the quick sale value. So if you were to sell it quickly, maybe it'd be worth 80%, and there's your valuation. These are going to be totaled up and added here. This little 3 subsection is retirement accounts. This little 4 subsection is insurance policies that have a cash value. Now, this does not apply typically to term life insurance. It's whole life insurance that has a cashable value, whereas I can go get money for it, not it pays out $500,000. There's a continuation of the personal asset information. Real estate you own, make sure you put anything, even if it's just a piece of land. They want to know if it's your primary resident or not. If you have paid off properties and it's worth more than tax debt, again, that goes back to assets being worth more than the tax debt, and you're probably not going to get a settlement. Doesn't mean sometimes you can put it in non-collectible. And the exception is, sometimes if it's a primary residence and it's not worth that much, you might still be able to get a settlement. We've had a client actually who lived in Mexico, and he was still able to get a settlement because he could show he couldn't sell the house. We also had a client that lived in a not that high value house, and we were able to have that excluded from the settlement value. So that does sometimes work out. I don't always include this. If it's a primary residence and it's really not worth that much, I sometimes still will go for an offer in compromise, but it's just not a for sure thing. It's really up to the agent, and sometimes you have to appeal it, and it may or may not work, but it is often worth a shot. And if you're not sure on that, you can also give us a call at 888-515-4TAX, and we can go through that with you. Again, that's 888-515-4TAX. Vehicles, lease, loan. That if it's a lease, there's the value and stuff really doesn't even matter. If it's a loan, all that matters. Most cars are underwater, especially if you bought it new. So typically these are going to zero out on value when you're paying a payment on most cars. If you have a fully paid car, these are also going to be valued at 80%, just so you know. But if you have a paid off car, you're still going to be subtracting $3,450 from it. This calculation, I don't always include that in the offer in compromise. Perfect example is someone has a truck and it's needed for work, and the truck is worth $25,000. I'm not going to put an offer that says $25,000 minus $3,450. I'm just going to say the truck is needed for work. Please don't include it in the offer amount. And often that does work. Okay, so here's our personal asset information. Continued. This is artwork, jewelry, all that kind of stuff. Basic small stuff, they don't really care. They're looking for, if you have like a really expensive watch, something like that, that's probably the type of stuff they're looking for. Most people that are looking for an offer in compromise, very few have expensive artwork and things like that. Section 4 is self-employed information. Even if you're W-2, if you have a side business, this should all be filled out. Many are going to be sole proprietorship. Say yes or no. Fill this out as accurately as you can. Number 5, ask for the assets for your self-employed business. So those assets are going to be totaled up and considered part of the amount that they can settle for. Exception to this is like if you're a partner, like in a large law firm, like we've had clients like that, they're not going to go through and say, oh, this is an LLP and you're owed this much, so you have this much value. Most of the time you can get around that kind of stuff. Not all the time, but a lot of the time you can. If you don't have direct control over like being able to sell parts of the business and things like that, sometimes you can get it excluded from, being a settlable, an amount that's going to be included in your settlement. And that's not all the time, but sometimes. And that's something that where, an attorney probably comes and helps in arguing that for you. Section 6, business. So if you're self-employed, they want to see all this information. You can get around this by providing a current profit and loss statement. And then you just got to include the gross monthly and like the gross expenses, and then it makes it simpler. So if you already have a profit and loss, you can do that. One shortcut on this is if you have a Schedule C or the actual business of profit and loss in the tax return, and we're not too far in the year. So say this is you could probably still do this now. I would just take the Schedule C or the business profit and loss in the tax return, and then you can use that data on here. And that just saves you time. But if things are another thing that should be mentioned is if you're doing worse financially recently, you should include that data and make a new updated profit and loss. Section 7, monthly household income and expenses, wages, Social Security, pensions, other income, unemployment, that kind of stuff for you and your spouse. Any other type of income that's coming into the house, interest and dividends, distribution, net rental income, net business income. A lot of self-employed people are just going to have this box filled. They're not even going to be doing this. And most people that are wage earners are probably just going to be doing this. Some people get child support, might put that, alimony received, and that totals your household income. Then these expenses here. So everything here in this monthly household expenses section is going to be based on the IRS collection financial standards. So I'll actually just Google that for you. And the reason I even Google it and we don't just put that on our site is this changes all the time. So when we're doing these two, we go through and we look at the most updated information. And so here, all this stuff right here, this food, clothing, whatever, you're just going to pull that from, just search IRS collection financial standards on Google, and it just comes up first. And you're going to take this number based on how many people, are part of your dependents in your house. So that makes that part really simple. Housing utilities, again, is going to be in the same area. I put actual housing utilities as what they want, but you want to look at this number anyway, because if you exceed it, they may not allow it. So for example, we'll do Nevada, Clark. So Nevada, Clark County. Okay, these gone up a little bit. So this is how much you can spend max per person on housing utilities per month. Anything over that, they could disallow. They don't always disallow it, but they're supposed to. And you can argue why you need those extra expenses. If you have special needs or something like that, that could be a reason. Or you need to be close to work, that could be a reason. And that number goes there. Vehicle loan and lease payments, put the actual amounts in there. But there's the same thing that applies here, where you could be going over that amount. And here you're going to see transportation standards. And it's always best just to go direct to the IRS website for these, because these change. Do not rely on this looking at this video right now. Do what I recommend in the video and search and look for it. And so here's your vehicle standards. If you're just riding public transportation, then we'll do loan payments. Actually, that's what we need to do. Here's the ownership costs. So for 2 cars, it's $994. For 1 car, it's $497. So your loan or lease payment, if it exceeds that, they could disallow it. Other reasons you can say, I need this for work. It's a truck, things like that. Reasons why you need a more expensive car, sure. You can get a pretty good car for that payment if you know what you're looking for. Operating costs. So operating costs are going to be based on your local numbers, again, unless you want to change it. So we're going to do West Region. So West Region is 218. And so if you're in one of these cities or these areas, that applies too. So those end up knocking them up. So for example, if you're in Los Angeles, here's where West Region. So we're Clark County, right? So I would just go. But yeah, we're not actually listed in any of the city ones. But if you're in Los Angeles, and this Los Angeles probably also applies to Riverside County. So when you go to Los Angeles, you go by, for example, go to West Region. Los Angeles, Riverside. So see Riverside, San Bernardino, Los Angeles, Orange. These all apply in West Region. In Las Vegas, here, we're Clark County, which is just West Region. So we're just going to do 218 per car, 436 total. But you want to use these higher numbers if you're in one of those cities. And, and you look through, there's a bunch of them depending on your region. And that just pushes you over the edge a little bit. The other thing you're going to be adding here is, if your car is over 75,000 miles, you can add $100 per month in operating cost per vehicle. So if you had 2 cars that had, each one has 85,000 miles, add $200 total. That's if you're married with a spouse. If you're one person, they're just generally going to give you credit for one car unless you can prove why you need that other car. Public transportation costs. Technically, you should be using this or that most of the time. So 41, 42, or 43. But if you live in New York or something like that, it's not that unreasonable to include this. Sometimes they'll accept it, sometimes they won't. But I'll just throw in the public transportation costs if someone is actually using this and the other ones. If you're only using public transportation and not any of these two, then just put public transportation. Health insurance premiums, put your actual. Out of pocket, again, this is going to come from the standards unless you can prove otherwise. If you can prove they have a more expensive, here you go, out-of-pocket healthcare. So if you're going to prove that you have more expensive out-of-pocket healthcare, then this number that they give you, which now is 52 if you're under 65, or 114 if you're 65 and older, then you put that number. So most people are just going to put 52 or 104 for two people. If you're over 65, they're going to put 114. But there are people that have diabetes and they spend $500 a month. Well, you need to show proof of that. But if you can, go ahead and put that actual number in your out-of-pocket healthcare. Otherwise, rely on their default number from the standards. Court-ordered payments, if you got them, whatever they are, alimony, child support, restitution, lawsuit payments, whatever it is, you put them in there. Child dependent care payments, whatever those are, daycare, you have someone watching your kid. I actually have argued that sometimes school could be included in here. If the school holds the kid much longer during the day than the regular school would, you could try to argue that. May or may not be accepted, depends on the case. Life insurance premiums, your actual cost. Current monthly taxes for state, local, everything. You should be paying estimated tax payments. If you are, break that down to a monthly value and put what it is. We do recommend, if you are self-employed and doing an offer in compromise, pay your estimated taxes monthly while the offer is pending. It makes it much easier and much simpler. Secured debts. So a secured debt would be something where you have collateral for it, or a student loan. Student loans are considered secured debt. We actually will throw in secured debt. So anything that has a loan against it. What would not be thrown in here is like a vehicle, because a vehicle is going to be included here. Technically, that is a secured debt, but it's not going to be thrown in there. So state and local tax payments, if you're making payments to a state on a monthly basis, that'll be included in here. That's another thing too. So if you owe the IRS and the state, and you don't owe the state that much, and it doesn't look like you're going to get a state offer in compromise with them, sometimes you're better off setting up a payment plan with the state first, then submitting your IRS offer in compromise, because now you got that extra expense to include in here. So now we're going to have box E and F. Pretty much E is all your household expenses. F is what do you got left over at the end of the month. Really what we're going for here is zero. Even if it's a negative number, you're going to put a zero, but we want this to zero out. If you zero in the negative, that's best, because now your offer is 0 times 12. And 0 times 12 or 0 times 24 if you're doing the other one. But we're generally going to be going for the lump sum offer. So it's going to be 0 times 12 is 0. And then hopefully all the assets are 0 or lower. Not 0 lower, I mean 0 or nothing. So 0, 0. And then your offer technically could be 0. But in most cases, we're just going to offer $100, because in our experience, that's been the number at which, if it's going to go through, it just goes through, and they don't really ask that much more. There's been some cases where people just get Social Security and stuff and will offer $50. But most offers are going to do $100. And you'd be surprised, a lot of them actually come through for that. Section 9 is your other information. Now, these are just a bunch of general questions, okay? Trust or estate, are you a beneficiary of a life insurance policy? A lot of people are just going to be no. Are you currently in bankruptcy? If you are, you probably shouldn't be filing this right now. If you've already gotten one, put in your bankruptcy data. Lawsuits, have you been a party to a lawsuit? If it's from 25 years ago, they probably really don't care. You can just write in your cover letter, I had a lawsuit 25 years ago, I don't remember, and they're probably not even going to care. Any lawsuits involving the IRS United States right now, most people are going to say no. Transfer any assets for less than full value, most people will say no. An example would be like giving your kid a car Selling a friend a car for less than it's worth, you should include that info. If it's really not that significant, they're not going to care. Transferring, real property in the last 3 years, they do want the details on that. Have you lived outside the U.S. for 6 months or longer past 10 years? You should mark that. You own anything outside the U.S., anything held by a third party, anyone holding money for you, that kind of thing. And then you sign. End date with your spouse if it's joint. Then you're going to go through this checklist. Hold on one second. Okay, so the other part we have here is the checklist. And these are the items you want to include with your paperwork. It's pretty self-explanatory. So your most recent pay stub, earning statements, etc. from each employer. The only exception I would say here is if you don't have a year-to-date pay stub, put that if your pay stub does not show year-to-date information, which almost all of them do, include your last 3, and that's for you and your spouse. Copies of your most recent statement for each investment and retirement account, pretty self-explanatory. Most recent statement from all other sources of income, pensions, Social Security, rental income, interest and dividends, court order for child support, alimony, and rent subsidies. If you don't have your Social Security statement, just send it in. They will verify it, and it usually just works out anyway. Copies of individual bank statements for the most 3 recent months. If you operate a business, copies of 6 most recent statements for each business bank account. The only exception to this, I would say, is if you have a bank account that just shows a lot of income in the past 3 months, but really it's not normal, I would show even farther back bank statements and say, hey, this was just lucky on these few months or whatever reason it was, or you borrowed money, and include those bank statements to explain that. Copies of the most recent statement from your lender on loans, such as mortgages, second mortgages, vehicles, showing monthly payments, loan payoffs, pretty much your lender stuff. What do you owe on your house, that kind of thing. If you have a ton of equity, settlement might not be a good option for you. If you're not sure, give us a call. You can reach us at 888-515-4TAX. Again, that's 888-515-4TAX. List notes receivable, if applicable, doesn't apply to most people. Verification of your state or local tax liability, if applicable. If you owe the state, you can call the state and request a transcript of what you owe, and usually that will work. For special circumstances, anything to help that explanation. Also, if you have medical issues and you're not doing this type of offer, I still would just throw that information in there. If you get a state from your doctor, might as well just include it with your offer. If you don't have an 2840 on file and you have a power of attorney, they should include one. Almost anybody that's doing your case should have already called the IRS and already have this information on file before they're submitting this. There's some firms that don't, but most of them should be checking status and making sure your collections is fine before you're getting through to that part. Completed, sign Form 656. That's the other one we just went through. Now, the other thing I would add to this is I would add a brief cover letter just explaining your circumstances and with your address on it. We always include a brief cover letter because it's just good. There's always some explanation of some circumstances that should be added in there almost all the time. And this is the other thing you need to do. And then you need to mail it out. Depending on where you are, depends on where you're going to mail it out. We have the addresses on our website of where you're going to mail them. I recommend doing 2 things. Make a complete copy of the entire thing that you are sending. Scan the whole thing, make a copy, print up a whole entire copy, start to finish the entire thing with copies of the checks. You also should send it certified mail with return receipt. Keep a copy of the receipt, keep a copy of the return when it comes back. And there you go. Now you send it in and you have the other part, make sure you have the 2 checks. So there should be a check, as we mentioned before, for $186 for a processing fee and the 20% down payment of what you owe. So if you either qualify for the fee waiver, as we mentioned before, if you don't qualify for the fee waiver, you need to include those checks. Those checks, put on it United States Department of Treasury. In the memo line, put your Social Security number. I put primary SSN, and I write OIC down payment. And if it's not for the down payment, if it's for the processing fee, put primary SSN, OIC, processing fee. This just makes sure they don't mess it up, and copy those checks as well. So you got copies of everything, sending it certified mail, and then wait for a response. And that's it. You go from there, see if you can do it. If this is too confusing and you want us to do it for you, we can. You can call us at 888-515-4829. Again, that's 888-515-4TAX. And that is our guide on how to do an IRS offer in compromise. Good luck.